CPA versus CFA showdown isn't just a certification comparison, it's a career identity question. Do you want to work with audits, taxes, financial reporting, compliance, and the accounting side of business? Or do you want to work with investments, portfolios, markets, valuation, and wealth building strategy? Both paths can be respected, both can be lucrative, heck, both can be life-changing, but they are built for very different people. So let's make this simple. The CPA, or Certified Public Accountant, is the major credential for accounting professionals. CPAs are often connected to public accounting, audit, tax, financial reporting, compliance, and advisory work. If you picture someone reviewing financial statements, preparing or advising on taxes, working in audit, helping a company meet reporting requirements, or moving into controllership or CFO roles, that's very CPA coded. The CFA, or Chartered Financial Analyst, is focused much more heavily on the investment world. If you picture someone analyzing stocks, managing portfolios, working in asset management, hedge funds, equity research, investment banking, private equity, or wealth management, that's much more CFA coded. So here's the cleanest distinction. The CPA is more about accounting, reporting, tax, audit, and business compliance. The CFA is more about investments, markets, valuation, portfolios, and financial analysis. And already that should give you a clue, because if the idea of studying tax rules, audit evidence, financial statements, and accounting standards makes you want to throw your laptop out the window, the CPA might not be your dream path. But if the idea of spending hundreds of hours studying economics, derivatives, equity valuation, fixed income, portfolio management, and ethics makes your soul leave your body, the CFA might not be your dream path either. Do either of them excite you? Pay attention to that feeling, because this isn't about which one is better, it's about which kind of work you can see yourself actually doing. Now, let's talk about the exam paths, because they are very different. The CFA program has 3 levels: level 1, level 2, and level 3. You take them in order. Level 1 is more foundational. It tests your understanding of investment tools, ethics, quantitative methods, economics, financial statement analysis, and other core finance topics. Level 2 gets more intense with asset valuation and applying analysis. And finally, level 3 focuses heavily on portfolio management and wealth planning, so it's about pulling everything together and using it in a more practical investment management context. A lot of candidates plan around roughly 300 hours of study per CFA level, which means the whole CFA journey can be a serious multi-year commitment. The CPA exam is structured differently. CPA candidates take 4 exam sections, 3 core sections, and 1 discipline section. The core sections are Aud, FAR, and Reg. Aud is auditing and attestation, FAR is financial accounting and reporting, Reg is taxation and regulation. Then candidates choose 1 discipline section: BAR, ISC, or TCP. BAR is business analysis and reporting, ISC is information systems and controls, TCP is tax compliance and planning. Each CPA exam section is its own mountain. Candidates often study somewhere around 100 to 150 hours per section, depending on the section, their background, and how comfortable they are with the material. So the CPA may feel broader across accounting, tax, audit, and business concepts. The CFA may feel deeper in investment analysis, valuation, markets, and portfolio management. They're each hard in their own way, but whichever path you choose, you are going to need a real study plan. Winging it won't work. Now, on to the requirements. For the CFA program, candidates generally need to meet education or professional experience requirements to enroll, and to actually become a CFA charter holder, they need to pass all 3 levels, meet work experience requirements, and follow CFA Institute's professional conduct standards. For the CPA, requirements are state-based. That means your exact education, experience, and licensing requirements depend on your state board of accountancy, and many candidates need around 150 semester hours, accounting and business coursework, CPA exam passage, and relevant work experience. So please check your state board and get a definitive list of your requirements. That's not glamorous advice, but it can save you a lot of pain. Here's an important piece. Let's talk careers. If you choose the CFA path, you're usually aiming toward investment-focused roles. Now, that could include financial analyst, equity research analyst, portfolio manager, investment banker, risk analyst, asset management professional, private equity associate, or wealth management advisor. advisor. The CFA can be especially powerful if you want to work in the world of capital markets, where people are analyzing companies, valuing securities, managing client portfolios, and making investment decisions. Now, if you choose the CPA path, your career options usually sit more in accounting and business operations, and that can include auditor, tax advisor, public accountant, accounting manager, financial reporting manager, controller, consultant, or CFO. And yes, CPAs can absolutely work in corporate finance, advisory, and executive roles too. The CPA is not only for people who want to spend their lives in tax season forever, but the foundation is accounting. That's the home base. Now, let's talk salary, because for a lot of people, this is a huge part of the CPA versus CFA decision. Based on the salary data in our comparison, CFA professionals tend to show higher average compensation, especially in investment-focused roles. CFAs have an average salary around $91,723. The reported salary range runs from about $62,000 to $192,000, and experienced CFA professionals can average around $142,500. CPAs also have strong earning potential with an overall average around $76,485. The reported range is about $54,000 to $123,000, with more experienced CPAs often landing in the $90,000 to $120,000 range. So does the CFA pay more? In many investment-heavy roles, yes, the CFA can have a higher salary ceiling, especially in portfolio management, asset management, investment banking, and equity research. But the CPA can still be incredibly valuable because it opens doors in audit, tax, public accounting, corporate finance, controllership, and CFO track roles. Now, should anyone get both? For some people, yes. A CPA plus a CFA can be a very strong combination if you want to blend accounting knowledge with investment analysis. That can make sense for corporate finance, transaction advisory, valuation, financial due diligence, investment analysis, strategic finance, or leadership roles where you need to understand both the accounting details and the bigger financial strategy. But that does not mean that everyone needs both. Please do not collect certifications like Pokemon cards. Each one costs money, time, energy, and focus. So if you're deciding between them, ask yourself this: do I want to build my career around accounting, audit, tax, reporting, and compliance? That points you toward the CPA. Do I want to build my career around investments, markets, portfolios, valuation, and asset management? That points you toward the CFA. Do I want a career that combines financial reporting knowledge with investment decision making? Then maybe both can make sense down the line, but you have to start with just one. Ultimately, whether you choose the CPA, CFA, or both, make the decision with intention. Know the work, know the exam, know the career path, and then commit. If you liked this video, please give it a like and subscribe for more accounting and finance certification breakdowns, exam updates, and study strategy tips.